We're going to look at the 2019 accounts rules at a fairly high level, just to give us all a refresher and set the scene ready for what follows. We're then going to look and spend quite a bit of our time focusing on the high risk areas in the SRA accounts rules. And these aren't the only risk areas that are there, but these are those things that the SRA have been releasing guidance about over the last months or years even, and the things that sit at the forefront of the minds of the SRA and the reporting accountants. So probably the things that really need to be sitting at the front of your minds too. We're then going to explore ways that we can mitigate the risks, help either head those risks off, or if the worst comes to the worst, what you can do to deal with them properly and efficiently. And then we're going to wrap up the session just by looking at any other guidance that we've not already covered. There's a fair bit of guidance out there. I'm not going to go through all of it in detail, but there are bits that we'll touch on as we go through, but then I'll just wrap it all up at the end with those bits we haven't covered. You should also be checking that transactions are in a chronological order. Now, most systems are absolutely fine with this, but sometimes if somebody goes back and backdates a correction, they made an error at the beginning of the month and they only realise it later on in the month, they go back and correct it. Sometimes that backdating throws everything out of chronological order. Now, your ledgers should be in sequential order, so you can see at any one time what the balance was on the client and the office ledger. So making sure that that basic function is working. Making sure that all matters have a clear description. The rules say that matters have to be easily identifiable. So making sure that, especially where you're acting for one client on a number of different matters, they're not all just called matter 1, matter 2, matter 3, or general 1, general 2. You know, there needs to be a clear description. Really important where you're doing different types of work for one different client, because you need to know what money relates to which of those matters. Making sure that miscellaneous ledgers aren't being used. So matters aren't being used for more than one client. Each client has to have a ledger, however small and inconsequential the work is, each client has to have a ledger. So being absolutely sure that there aren't those rogue fee earners setting up miscellaneous ledgers and just allowing money to pass through those for different clients for one-off small bits of work. Obviously making sure that banking services is not being provided. That's part of your client file review work should pick up whether money passing through the client account is expected. You know, the nature of the matter you're looking at, does it seem sensible that funds of this size or this type are being allowed to pass through the client account?